we'll just get started. It's 4:59 at 5 p.m. We'll get started with our discussions.
Cheers.
Yes, we are live on YouTube and Twitter also.
Oh, nice. Okay, cool. So we're good to go.
Yep. Awesome. So it's 4:59. In a minute, we'll just get started.
Let me see if I can just turn off my.
Okay, so it's 5 p.m. Thank you so much, everyone, for joining in. One of the things we really want to do right is to start events on time and finish on time. So it's 5 p.m. And thank you so much, everyone, again. So I'm Jatin. I'm one of the co-founder of eChai. We host a lot of engaging startup meetups. Earlier, we used to do it in a lot of cities in India and all over also. But now we have just a lot of things have moved online, and we are trying to figure out interesting ways on how we can engage more people or create good content. So we host this Startup Investor Perspective series where we have prominent angel investors, VCs from the community to come and interact with the founders community. Today we have Anirudh Damani, the managing partner at Artha Venture Fund, who himself hosts a lot of interesting programs where he engages founders. So it would be nice to host him and just understand his perspectives and learn from his experiences. So just a couple of housekeeping announcements. We are live on Zoom, so we have a lot of friends who will be joining us live on Zoom, and some will be watching from YouTube, Twitter, or Facebook. So friends, if you have any questions, you can ask in the chat. So what we will do is towards the second half of the session, we'll have some of you to actually speak up and ask your question and not just read out your questions. So if you can ask in the chat, that will allow us to choose who I should allow to speak. So if you ask questions, then there are very high chances you will get a chance to speak up or your questions will be answered. So that is one. And the format is going to be, I'll just get started with our discussion and we'll get to a very interesting engagement over this session. So Anirudh, thank you so much for joining in. And if you can briefly just give background about you and your firm, and then we'll get started with our discussion. Yes, Anirudh.
Yeah, Jatin, thank you so much for having me. Here's my chai. So, with the eChai, I have a real chai over here as well. So to give you a brief background about myself, I am a fourth generation entrepreneur from my family. Second generation as an investor. So my father started a business in stockbroking in the 80s, late 70s, early 80s. And I went off to the US, graduated. And after graduation, I actually joined an energy company where I worked and became a national sales director within 5 years, and eventually ended up buying the book of business from my boss and ran it for about 3 years before selling it. So that's pretty much the first eight professional years after graduation for me. I came back to India with the intention of setting up a similar energy business, like the one I had in the US. And while setting up the company in India, I realized there was such a huge gulf between how you would run a business in India and how you run a business in the US. And I think that's where the genesis of helping out entrepreneurs in India who deal with, I think, some of the most hostile conditions in the world for entrepreneurship, but also in one of the most exciting markets globally. The idea was to give them a bit of money, a lot more of my time, and be very heavily involved in the operations of the company. Did that, been doing that for about 6.5 years before turning institutional. So the idea wasn't really to be an institution at any point. I was happy writing checks from my own bank account and my family's bank account. But I realized that there was a significant gap in the early stage ecosystem in India where, which was not getting fulfilled, right? Most entrepreneurs would find it easy to raise a 1 to 2 crore seed round, but they would have tough time getting follow-on round from the same investors. So they had to keep going out and raising capital from different investors with different motivations. And the idea occurred to us that why don't we set up a micro VC fund where we reserve 70% of the fund for follow-on. And the idea would be that we would be able to follow on with larger checks into our portfolio, and the entrepreneurs that are doing well could expect, about 15 crores from us in 3 rounds. So that's basically what we do. 85 companies invested into, lots of great stories. I'm sure we'll get into that as we proceed along.
Thank you so much, Anirudh. So thanks to lockdown, all of us are at our homes or even in our offices. Most of our engagements are happening online. So key part becomes you represent yourself on various online platforms and mention what you do. So Anirudh, you have a very interesting bio in your profiles. You mentioned 85 startups invested, 44 scuba dives, 3x founder. So why this particular bio? Like, what was the thought process on writing this particular thing, or what? Yeah.
I think I think obviously we tend to put in India the VC on a pedestal as if he's some sort of a god, and it really isn't, right? I think we're all humans. We're all trying to figure this thing out of what kind of companies work, what doesn't work, and but I can tell you that there's more to a venture capitalist than just the money, right? And then and as a VC, even as a founder, you need to open yourself up to multiple different experiences, and I think. I promote that through my blog, through, I'm about to start writing a book. I run a show called The Money Talks that happens every Thursday. And the idea being that, you have to open yourself up. Tomorrow, if I'm telling my founder to do something online on how to promote a show or how to promote a product, right? I need to also have experienced that from my side, right? And that's why I keep opening myself up to experiences. That's why I have a very live, social media team. So, and all these things I think are required. So basically this is a sort of a testing, and once I gain the experience, I can then impart it back to my founders, who can then utilize that experience in their own businesses and hopefully not make the mistakes that I did. So I think that's the role of a VC.
Okay.
And therefore you keep opening yourself up to more and more experiences. I can very well tell you that not all the businesses that I have started or all the businesses I have invested in have worked out, but I've learned so much from them that the next time I see an entrepreneur, I can use that failure and make sure that that doesn't happen again.
Correct. Anirudh, you mentioned that you were leading energy company in US and then you come back to India. So what was that trigger that this particular moment you decided to come back? And when you came back, you started you were part of the venture part, or it was a energy venture and then it became a venture fund? So what was that journey like?
Yeah, so I'll tell you what the energy business was first. So in the US there was a law change. It's just happening in India now, but where a homeowner or a business owner could choose who they buy their power from, right? And that was in 2003. The law was enacted in 2005. Was becoming mainstream. So at that time, websites weren't a big thing in the US. So how do you go sell a new energy company to people? So the best way was you go and knock on their door, tell them what's happening, and sign them up on the spot, right? So that's what I did for the first 4.5 years. I basically knocked on over 100,000 doors across the US. I must have walked into at least 25,000 businesses, door to door, just mapping out the entire area and building a book of business, right? But we were extremely good. My boss had developed a system of selling over 20 years of him being in the business, and he imparted that knowledge to us. And we were able to expand this business across the US. So, in 2008, we were working with, I think we were already had standing contracts with the top 5 energy companies in the world, in the US. And we were a very small company. I mean, compared to how much revenue they made, we weren't even 0.1%, but they would still come and want exclusive contracts with us because of the system of selling that we had come up with. Now, in 2010, when I took over the business during the recession, the idea really was, I wanted to become an entrepreneur. This was a great opportunity. But in 2013, there was a good offer to buy the business, right? And there was 2 things that could have happened. So both my partners at the time were about 10 years older than I was. I was roughly 29, 30 years old at the time. And so they had different motivations, right? They were looking more for a relaxed lifestyle. We had all just been through a great recession where everybody saw their portfolio sort of, go upside down, and things were finally coming back, into a way where you could make money again. You could be a bit comfortable. But for me, I was like, I'm 29 years old. I'm not looking for comfort. Right? I'm looking for growth. How do we grow this thing? How do we scale? But there was, between the founding group, there was a bit of a disalignment. So amicably we decided, listen, why don't we just split the business? I thought that India would be a bigger challenge, and the energy side in India was just growing in 2012, and I thought, why don't I go back to India and try my luck over there? And I came back to India with that intention to set up an energy company, similar business to what I did, and that was the first business. Artha India Ventures was sort of a hobby. I was just saying, while I set up this business. I mean, Jatin, most people don't know this. It took me 9 months to register the name for my business in 2012. Wow. 9 months. I didn't even register the company. Just the name took 9 months, right? And in the US, we chose the name within an hour. We could, there's a website, you can choose the name. It tells you whether the website's available and whether the .com for that website is also available, right? So it took all of an hour. In 24 hours, we had a bank account and the company incorporated. And within the next 24 hours, the bank called us. We didn't call the bank. The bank called us and said, "We've checked your credit. You guys are starting up a new business. We're extending you $150,000 line of credit." Mind you, this is 2010. This is in the middle of the recession. In India, this doesn't happen even today, right? So when I came back to India, you could just imagine the gulf, right? Everything in India works against the entrepreneur. Like, to open up a bank account is one of the most painful processes in, I think, my entire entrepreneurial journey, right? The number of papers you have to sign to open up a bank account in India, it is criminal. I think the banks are killing businesses here. So that's why I think the idea was that, because even with my a little bit more privileged background than your typical IIT or finance graduate, if I was facing so many difficulties, can you imagine what was happening to the uninitiated? And that's, I think, where the genesis of the idea came up. Like, listen, I'll give you some money, but I'll also help you navigate through all these difficulties, right? And with my experience and your enthusiasm combined, and a little bit of capital that I'll put in, plus what I can syndicate from my network, I think we can create magic. And we did. I think that's the best part, is these founders that we were able to support actually went out and created magic. They in a way, they built or they encouraged me to take this up full time. And that's what I did, right? I think otherwise we wouldn't be sitting here.
And Anirudh, what were those early startups like, when you were also figuring out whether you will go full time into investments or it was a hobby? So what were those early startups and how did you discover them?
So a lot of the discovery initially happened through Mumbai Angels. That was the first angel network that I joined. In the US, I was part of the Dallas Angel Network. It's now become into a fund. And then obviously joined Venture Nursery and then Indian Angel Network. So I've been part, and then Venture Catalyst was where I was part of the advisory board. Now, initially, I think that was the way I found companies. Then obviously, once you start having early successes, you've got some good companies, founders start referring people to you, and that's how we built our referral network. In terms of the early companies, I think Exotel was within the first 10. OYO was within the first 12. We had Purplle, we had Baby Chakra, we had Tala. So these are all companies that have gone. Mobilewalla. So I think within the first 25 companies, we had like 5 or 6 that did really, really well. And I think that built out the confidence that we need, that this can become a full-time activity. Then after that, I think some of the great companies after that, Coutloot, Confirm Ticket, then Karza Technologies recently, and so on and so forth.
And how much time it used to take for you to get into the invest? Like, you made a founder, and then typically, what was the time duration at that 2013-14, and now what is it?
The time duration has gone up, I would say, right? I think earlier, obviously you had an angel network that had its own team that was doing due diligence, right? Mm-hmm. And obviously at that time, Anil Joshi, who was heading Mumbai Angels, and I had a very good, tight relationship. Even today, we are very good friends, but he's running a fund today, right? So at that time, we really could bank on the due diligence done by the angel network team. And so we didn't have to do as much, right? Because also the members were involved in doing all of this stuff. I think today, because we're running deals on our own, so my due diligence has changed, right? I think the world has also changed in a big way. So there is a lot more venture, there's a lot more competitive stuff that is happening. So today it takes, from the time we meet an entrepreneur, the fastest, I think, founding team that has received money from us after meeting, from the time it took from where they met us to where the money was in the bank account, was about 65 days.
Okay. Yeah. Wow.
So, but that's the fastest. I think if you have all your ducks lined up, you've got your paperwork in order, everything is ready. 60 to 75 days is the fastest. But if there's a lot more complexities, a lot of time entrepreneurs don't take care of paying GST on time, or there's some TDS liabilities here or there, then it could take, the longest one's taken 6 months, but it was more, the money's in the bank account, is just for founders to make sure that all the hurdles are removed.
Awesome. Friends, if you have any questions, you can ask in the chat. At around 5:30, I'll allow you to speak up your questions. So keep on asking those questions. We'll get started with this audience question at 5:30. Anil, you invest with, when you invest in a startup, then there are a lot of other investors, those founders will also take. So how do you work with the those other investors? Typically, what's the your process?
Working with co-investors?
Yes. So they invest and they take you on board, or you invest and then you also bring other investors on board, or typically how it works?
So now we run a fund, right? So we're an AIF, right? I'm the managing partner. So usually all our LPs have pooled their money into a structure from which I invest into companies, and it works like a mutual fund, right? So I act as advisor, as a manager of the money, and all the money's into the fund, and then the fund makes a single check to the investor, and then also holds all the shares. But how do we activate our investor network, the LPs that have invested in our fund? Actually, so I write a monthly newsletter to all my LPs, right? And I tell them what's happening in every single company, what challenges we're facing, what are the challenges we face as an investment team, what are the challenges our companies are facing, where they need help, and where they can help us. And I also ensure that we engage them even on WhatsApp with all the updates that are happening in the portfolio. So I think through this strategy, plus the quarterly reporting, plus the AGMs that we do as a fund, I think our LPs are very well informed of what's happening with our companies, right? In fact, a lot of our LPs have gone on to even extend lines of credit. They've started working on business models with our investee companies, and honestly, the more hands, the merrier for us, right?
Absolutely. Anirudh, you have a good sample size. You invested in 1890 startups. So any pattern that you could observe that, founder, this is the pattern that you could see that makes a startup successful?
You know what? Obviously, there's so many patterns, right? I don't think there's only it's like any relationship, right? There's not one rule for success. But I can tell you that one thing that separates the winners from the others is that if the founder has a very strong personal motivation, right? If there's some personal motivation that drives the founder, I think those founders obviously go a long way, right? Because because there was a personal pain point from which the idea came up, right? And it's a burning issue for them that they have to solve it. I mean, those are the guys that are going to stay awake even at night at 2 a.m., 3 a.m. For them, timing, work-life balance, all that doesn't matter because they need to solve this problem. And I think those guys definitely, those people, those founders, they are a step above everybody else, right? And I think that's been one of the key factors that we also try to assess, that what is the real motivation of the founder, and is it really something burning that they really need to want to have to solve?
Okay. And Anirudh, post-COVID, what has changed, or what is the now that after 4 months of lockdown, you will have a sense that probably things might go this way. So what has changed in your approach, and what are you looking forward to? What will happen in next 1 or 2 years with respect to your fund?
See, in a way, I think we are always prepared for a COVID, right? I think in my own investment career, I've been through now 3 recessions, right? And so in every recession, I've realized the businesses that had gross profits survived, and the businesses that had gross losses did not survive, right? So the key has always been that there needs to be sustainable growth that can happen without external funding, right? People that continue to require external funding to grow in such markets, they die, right? And therefore, having unit economics, having product market fit, getting there quickly is one of the key factors for any business, right? What has changed for us, though, I think in a few sectors, right, like edtech, health tech, med tech, right? These are 3 sectors, like telemedicine. I'm not talking about technology around medicine, but like telemedicine. These would actually, I think these are the sectors which I thought maybe 5 or 7 years down the line would become mainstream, maybe 10 years down the line, because I thought Indians would take a long time to adapt and accept online medicine, right? Telemedicine kind of advice. But I think what COVID has done is they just crunched that timeline. And I think it's just brought everything right now, right? Correct. So I think my thesis towards health tech, towards ed tech, towards even consumer, I think we've had to update that over the last 3 or 4 months. It's still a work in progress, but I think digital platforms are going to become even more mainstream today. That a person would prefer buying something online than having to go to a store and buy it. right? And that is a huge shift that has happened in a very short period of time. And if COVID sticks around for another 6 months, and there'll be a permanent shift in consumer behavior, and most VCs would have to rethink, even founders have to rethink how they look at consumer behavior.
Correct. So friends, now what we will do, we'll allow some of you to actually speak up your question. So Saurabh, can you ask your question?
Yeah, hi. Yeah, hi. Thank you. Thanks, Jitin. Hi, Anirudh. Anirudh, I am Saurabh. I am leading one of the Niti Aayog supported incubator in Chennai. So actually, yeah, hi. So Anirudh actually wanted to know from you the one thing, what you see is as a general trend when it comes to incubated startup in India. I know there is a lot of things to be done. What would you suggest to incubators to make their startups more investment ready?
So it's a question that I've been trying to answer myself, right? But to your, let me put it to you this way. I think most incubators in India, I think that they're very important for the ecosystem. But what I haven't seen is that most incubators don't actually bring entrepreneurs as leaders for the incubator, right? So a lot of them have brought in a lot of academic staff or operational staff. So they're helping the companies in operational and academic ways, but they're not really bringing on that raw entrepreneurial talent that these entrepreneurs can look up to, right? And ask those questions that may be difficult to ask somebody else, right? Like for example, like if somebody asked me that, I have only 5 lakhs left in the bank account, and this is a question somebody asked me during a COVID webinar. I only have 5 lakhs left in the bank account. What do I do, right? And my payroll is 7 lakhs for next month. I don't know what I can do, right? Now that question, no academic person or an operational person can answer. That has to be answered by an entrepreneur, right? And I think there needs to be a greater participation. I was part of one accelerator that has done extremely well, which was Venture Nursery, right? Unfortunately, no longer live, but when it was live, the kind of support that they would get from other entrepreneurs to help out companies really grew companies like OYO and grew companies like Talview. They had, I think, Nikki.ai, I think, was part of that accelerator as well. And they had a very good hit rate. And I think that the difference was that they were able to bring in a board of entrepreneurs to work with these companies, and those founders could ask those questions that they would otherwise hesitate to ask, right? And get a real answer from a real entrepreneur, right? And I think that is usually missing in accelerators or incubators in India.
Thank you so much, Anirudh. Siddharth, can you speak up? And Anupam,
thanks, Jatin. Thanks, Jatin. Hi, Anirudh. So I'm Siddharth. I'm from Accelerator Biodesign. So Anirudh, I have a very probably kind of a stupid question, but it's bugging me for a long time. So see, whenever we go through any sessions or anything, especially for tech founders, we are always told that the early investors look at the founder and the founding team, and they need to believe them. But I always see that they all end up judging us on the B plan and the financial model that we have. Which, seriously speaking, we don't have any clue when we are building it, given that we are techies in nature. Why does this happen? And secondly, if the first point is true, what are the parameters do you look for, founders, and how do you weigh them, and how do you select them per se? That founder is good and he could run the company well.
So Siddharth, I think yours is a valid question, right? I think let me attempt to answer it in a way that maybe could help you and help other people that are listening in. I think if you're having trouble with the business plan and the financial model plan, you probably need to bring on a co-founder, or you need to bring on somebody who can actually make sense of it and be able to present to investors, right? And I think let me tell you why that is important, right? I think many times tech founders, right, they tend to hire more tech people, and they have a tough time hiring business people because they don't speak the same language, right? A business guy would talk in financial terms, a tech guy would talk in non-finance terms, and sometimes the balance of the team needs both sides, right, for it to make sense. Now, how do you assess that as a investor whether a particular team is going to have that balance, or is going to be something that's going to make it big? I think a bit of it is guesswork. A bit of it is spending time with you, with other members of your team. But what really matters for me especially is that if there is enough balance in the team, or if it's not, are you open to bringing in that balance into the team, right? And if that balance comes in where you've got a good tech side, ably supported by a good business side, that in both of them exist in a team, that's the perfect combination that we would like to see, right? And when what I've noticed is that a lot of the times, and it's happened to companies that I've invested in, I was a mentor and I was a director in the company, that we went after the tech and we liked the founder and the tech was amazing and it was growing exponentially. But when we started looking at their hiring strategy, all they could hire was more techies, right? And so literally there was nobody on the revenue or the business side. There was just a bunch of techies building tech that they did not know how to sell, right? And I think if that's the question you're getting again and again, it's probably a good time to probably bring on somebody on the business side, somebody from your network, who's good at finance, who's good at marketing, who's good at speaking to investors, and then having that association with together where you bring a bit of balance. And I think you'll probably get better at your fundraising conversations.
Awesome. Thank you so much. Anupam, can you speak up? So we'll take 3-4 more questions, then I'll start with my set of questions. Anupam.
Yeah, sure. Hi, Jatin. Hi, Anirudh.
Hi, Anupam.
So, so I'm calling from Israel, and I'm an Indian here, and I am kind of exploring. I worked in Israeli startups, couple of them, and I'm exploring, trying to understand the Indian ecosystem of startups. So, like you mentioned, Anirudh, that when you moved back from US to India to open up an account, it took you like 9 months. So, I mean, how it was back like 12 years ago or 13 years ago. How is it now? How is the situation now? And my connecting question would be, how is the government support, or are the startups being supported by the government or the regulatory bodies?
So I think things are, and thank you for logging in from Israel, Anupam. Really excited. I'm excited about the Israeli ecosystem. I was there exactly a year ago, and I personally invested in 3 Israeli companies in the last 12 months. I think great ecosystem. Now let me tell you that compared to 8 years ago, when I started in this ecosystem to where we are today, I think there is a 180-degree shift, right? It's still nowhere compared to what the US is, but it's not as bad as it used to be. I think because of the government, the prime minister's efforts towards ease of doing business, there is a significant shift today. You can at least get your company registered usually within a week, even shorter in some places. Again, let's say a week at the max. Bank account openings are much easier, much quicker. A lot of banks are actually coming out and wanting to support startups. They want to show that they are open to working with startups. There's a lot more people available to invest into startups, right? So I think on an overall sense, the ecosystem has definitely improved a lot. There's a lot more work to be done, but in terms of compliance, the government has made it easy. In the first couple of years, you don't have to worry about the compliance bit or having people knock on your door and trying to assess fines onto you. I think those kind of things have been eased a lot. What people used to call the Babu Raj, right, is gone. But I think it's an evolving ecosystem. If you come here, you must accept that it's not going to be similar to Israel. We are a country of 1.3 billion people, right? There is more people here in India than probably all the developed world combined. So it does take time for a ship of our size to make a turn. But things are happening. I think a lot of good stuff is happening in India. And now with all this FDI coming in, right, $40 billion in the last quarter came from US alone. I think there are some paradigm shifts happening in India. We're getting more and more open for foreign investment. So if you're here, you'll get a chance to be part of the change. And the good thing is the government's listening. They give you a lending year. So yeah, if you're looking at coming to India, starting something new, it's a good time to be in the space.
Awesome. Rupesh and Kavir. Rupesh, can you speak up?
Yeah, very good evening, Mr. Jatin. And good evening,
Yes.
Mr. Anirudh.
Hi, Rupesh.
Hi. My question is actually, at what stage is it easy for a startup to raise funds actually? Okay, I am a founder of 2 startups, and I'm working on a third one actually. Okay. So is it at the early stage? I've never gone for this kind of fundraising earlier. Okay, so I'm somewhere looking for now. But is it at the early stage, beta stage, or early revenues? When is it basically easy for to raise
So there are
funds?
different classes of investors that invest at different times in a company. What I would say is that usually, at least for me, I want to see a company with early revenues coming in. That's the time when I would be looking at evaluating the company for investment. If you're looking at coming in much earlier than that, then we had an earlier question from an accelerator incubator. So those are typically people who put in about 10-15 lakhs to get you started. So again, different investors for different times in the company. I personally would tell you that if you're looking to raise money and if you're a third-time entrepreneur, wait as long as you can, right? If you can get revenues, and if you can get customer capital before venture capital, right? I think your venture will be able to raise a lot more money. It'll be much easier, and you'll probably get a higher valuation as well. So always, I would say first seek customer capital before you seek venture capital.
Correct. Kabir, can you ask your question? Else, if it takes more time, Pratap, can you speak up? And then Adi.
Can you hear me, Anirudh?
Yes, Kabir.
Yeah, hi, Kabir, right? Yeah.
Yes.
Actually, it's not Kabir, it's Hiren. That's my kiddo's name, but he's using Zoom.
Please ask the question.
Yeah. So basically, we are working on a niche space in the real estate sector. That's more from the commercial and the industrial spaces. We're developing a portal and mobile app for the same. And just wanted to know your views on the sector and if you guys do invest into that sector presently and going forward, what are your views there on the same?
So, is this like when you say real estate tech? Is it like a B2B SaaS kind of a model, or?
No, it's not a SaaS. It's more from a coming aggregate all the state and take on it.
So I couldn't hear that, but was the voice? Was it me or
aggregating? No, your voice was breaking.
Yeah.
So
Kabir, your voice is breaking.
So probably Kabir, you can ask the Kabir. There was a breakage in your voice, so you can ask. I'll just read out your question. Pratap, can you speak up? And then Adist. Else, I'll just read out the question. We'll just take a couple of minutes to take live questions. I'll just continue with Adist, Pratap, Harshvardhan. If you can speak up, ask your question.
Yeah, can you hear me?
Yes.
Yeah, Pratap, I can hear you.
Yeah. Thanks, Jatin, and hi, Anirudh. Been a keen follower, with your Artha Ventures kind of things. We just started off into the fintech space, basically, with the recession dropping in, which we understand, which might be stable around the Diwali period. So we think there will be a lot of maybe settling down before the Diwali, and then it might pick up across the things. We do have founders across who works in day out with that space. Only feature is since it's a B2C thing and being in the fintech space, we don't want to get into the lending, though lending is very attractive if we actually follow Navi. But we want to be a bit different, understanding the pain points, people who work on it from a B2B side, also from the supplier side. When I say supplier, maybe banks. Because it's a cash intensive business, what are your views on that space? How do you foresee it?
Specifically the fintech space as an entire space you're talking about?
I'm talking about basically the marketplace lending. I mean, I'm even concerned about what's happened with CoverFox, because it's actually, kind of got some fears across with the guys. So yeah, so from that space, I'm trying to figure out if it's a cash intensive business, are you really keen or?
Usually, so I'll tell you, I think so. We've always found that fintech, so we have a lot of fintech companies in our portfolio, right? So Karza, Lendin, so on and so forth. Now, my issue with the entire fintech side, right, has always been that a lot of them are doing a lot of things, but they're unable to figure out who they're really going to make money from, right? And how they're going to make money and how they're going to be transactionally positive, right? A lot of fintech companies, are scaling on the back of venture capital or being able to raise external funding. But when you look through their business model, they're not actually making money on a per transaction level, right? So they're expecting that if customers come back 3 or 4 times to take a loan, then they'll start making money. Usually it doesn't happen, right? So I would say that there really needs to be a difference in the way you're charging the customer and how you're going to make money back, right? If you're like, for example, if you're looking to lend to SMEs, right? instead of giving them a clean loan, can you get involved in the transaction side and somehow do micro payments back per transaction to pay off the loans, right? Or if you're going to be lending to, when I looked at a company that was very interesting where they lend to the Ola drivers and then they make the money back on a per trip level, right? So they're not actually extending a loan for a fixed period of time. It's more like, the number of transactions he does or the driver does, the loan value comes down per transaction. And then they have a backend integration with Ola for it. So I think there needs to be some bit of innovation there than just a clean lending kind of a platform. So it really depends if you're doing that and if that's going to make the long-term money for it.
Awesome. So we'll take two more live questions and then others will take towards the end of the session. Harshvardhan, can you speak up? And one specific question.
Yeah. So Anirudh, my name is Harshvardhan and I'm the founder of Upswing Cognitive Hospitality Solutions. We do technology solutions for niche hotels across the globe. My question is, how likely it is for you as an investor to invest in two different companies with same product portfolio, and how you as an investor protect the conflict of interest between two companies?
Oh, okay. That's a tough one, right? So usually we try actively not investing in two companies doing the same thing. Okay, so that if we find that a company applies to us and or is reaching out to us for investment, but we've already invested in their competitor, we'll make it clear to them and try not to invest, right? But in certain cases, it has happened that a company has pivoted, right? Because whatever business model they were pursuing wasn't working out. So they pivoted and then they moved on to a business model that comes in direct conflict with another company. In that case, we let both companies know that we're on the cap table. We ask either one of them that if they want us to sign an NDA, right? If they want us to be less operationally involved, then so be it. But I think over the last 8-9 years, and I've displayed a high level of integrity in my companies. We've kept confidential information confidential, and we have a pretty robust system of maintaining, confidential information, not letting it get leaked out. So we've not had to sign an NDA with companies after we've invested until now. But if there was a situation where something is extremely, business secret and we have to sign an NDA, we'll do it.
Awesome. Nithun, can you speak up? So meanwhile, Nithun speaks up. Vivek had a question. Do you provide seed fund? Yes, Nithun, please.
Hi, Anirudh. Hi, Jatin. It might be a rookie question. So how is angel investing as an asset class, from a journey? Could you give me a CAGR?
So Nitin, it really depends, right? I think there are two ways of angel investing. One is passive and one is active. As a passive investor, I've done a bit of analysis here. So the most amount of information about angel investing is available through the Kaufman Foundation in the US, right? Because they've been tracking angel investing for multiple decades. In India, if you're an active angel investor, right, you should expect a CAGR anywhere between 35 to 40% and nothing below that, right? At a portfolio level. On a per startup level, it may be different. But if you're a passive investor, you could probably expect, maybe about 15 to 20% is what I would say. So if you cannot, therefore I always recommend that if you cannot be an active angel investor, active startup investor, you're better off going through a fund because you have somebody over there that you're paying to be active, right? Versus if you're going to be passive and you're just going to be investing, kind of spraying and praying your money everywhere, then I would say that you're better off investing in the listed space. You can probably buy some ETF and not worry about it. But if you're looking at being in this space, either be active or find somebody else who's going to be active for you.
Awesome. Anirudh, Vivek had asked two questions. A was, what are your priority sectors? Which are the sectors that you really want to invest in? And second one was, do you invest startups at a POC level or idea state level? Yes, Anirudh.
So 3 sectors that I'm completely interested in right now. Consumer. I think consumer spending in India is going to continue to increase. We have a bit of an aberration right now, but I think India's propensity to buy branded products is going to continue to increase. So I would say consumer definitely is one of my focuses. I think we also look at something called as a consumer enabler, anything that enables a consumer to consume. Okay, so like last mile delivery platforms, fintech platforms that are giving point of sale loans, online reputation management platforms, right? I think all these things that would encourage a customer to close a transaction, right? I think those are we put them in a class called consumption enablers, and we look at investing into them like that. And third, we're looking at B2B companies in India. I think B2B companies in India have, once they're successful and they build a robust tech platform for India, they can scale to the world. Because we literally are the United States of India, right? With so many different choices and so many different cultures and so many different languages. So if you can create a tech platform that works for India, it can work for the world, right? And I think those kind of companies with almost 40% allocation for our fund is into B2B, because I think those companies, if they do well in India, they can scale so quickly across the world, and they can make so much more money when they go abroad, because people are willing to pay more than they do in India.
And second part was, do you invest in idea or POC stage startups?
I do not invest in idea stage companies. So usually that requires a different level of handholding, which I do not have the bandwidth for, and my team doesn't have the bandwidth for. Usually companies that come to us are companies where they have early revenues, and they may not have product market fit, but they'll have early revenues when they come to us, or get funded by us.
Shiva, can you speak up? Else I'll just read out Kavir's question. So Kavir, yes, Shiva.
Hi, Anirudh. Hi, Jitin. Anirudh,
Hi, Shiva.
What do you think is the average customer cost for startups? I mean, it can be any verticals you can think of. Because in startups, I think that's one of the most difficult questions to answer. That how much would I spend, to get a market-based, customer? And we are a fintech company based out of Hyderabad, and we focused on micro lending for people who are underserved right now. But our model really understands on how they would get paid by, let's say, a government or somebody like that. And that bridges in the repayment or the collections for the lender. So on one side, we want to discover people who are not part of the ecosystem in banking and financial today. But at the same time, we know that they are being paid by the government or some other agency at some point in the future. So we can discount their loan today, like a cash advance against the government guarantee. But then the cost of acquisition of customer is the biggest question, which I think most of the startups are asking. And with your experience, what do you think would be the average out value in India?
So, it is, as you would know, there's no one size fits all, right? Every industry, every keyword has a different cost to it.
Yeah.
So what I can give you is more of a generalized, what should be your LTV CAC, right? And how quickly should you make money back on a customer, right? Typically, I would say something like your company where you're micro lending, that means multiple transactions in a year, right? To the same customer. I would say usually by the second or third transaction, you should have broken even on the CAC, right? So you have to find a way for that to be very sticky to that same borrower, right? So that borrower needs to come back to you multiple different times. Exactly. And I mean, if you were really asking me, and as a Marwadi, I would say you that maybe in the first transaction itself you should be making money, but I can understand sometimes that may not be the case. Correct. But at least by the second transaction, you should at least be breaking even. Third one may be the profitable one. And try to build a model where the customer or the borrower comes back to you at least 4 times a year, right? 4 to 5 times. Festival lending, early salary kind of lending, these kind of models. Otherwise, if the LTV CAC goes beyond 12 months, I think it's just too long to make money back from a customer. There's too many options, right? In 12 months in India, everything changes, right? We're moving so quickly at warp speed, right? That 12 months is just too long. 12 months is like a decade, So it has to be, the money has to be made back on CAC quickly.
Awesome. Kabir has this question. We are targeting $0.2 billion niche brokerage industry with other modes around the same in real estate sector. What are your views on the same?
0.2 billion. I mean, a $200 million target market?
Yes, 200 million. Yeah.
Very small, right? I think it's again, I don't know what the business is, but I would try to say that it's too small to really be VC funded. If that's one of the questions here, I think VCs typically like to see industries or at least a total addressable market in at least a few billion at the bare minimum, right? I mean, I'd like to see something more like 5-6 billion potential over the next 3 to 4 years. But 200 million is really, really small. Even if you had, 30% market share in a $200 million company, you would have $60 million in revenue at the max, right? I mean, expecting anything higher in a small market like that would be, really be gambling at that point.
Yeah. Okay. Kabir, if you can give more context to it, you will get a more specific answer. Adish has asked, I would like to ask on the contrary, if you have a tech-based startup, but there is no techie as a co-founder on the project, and the tech part has been outsourced to tech company based on SLA, how does that impact the?
Won't invest in it. If it's like saying that the thing that is your moat is not made by you, right? And you have no idea, because it's. I mean, that has to be the. If the tech is your differentiator and you're not the one in control of it, right? Then the person who owns the code is the one in control of it, right? And it becomes very difficult to invest in that company. I've just seen too many of these companies die, right? I mean, there is a famous example of what happened to Deccan Aviation, right? Captain Gopinath's company, where he outsourced the tech to be made by a different company, and then that company launched an airline. So using their design, right? So we have to be careful about those things.
So Anirudh, probably we are in the last 15 minutes of this session, so more like a rapid fire. So since you are part of a lot of things, you are on the boards, you mentor a lot of startups. How does your daily routine look like?
Oh wow, I think so. I usually try to wake up by around 4 a.m. right, and if I'm blogging and I'm in my blogging kind of mindset, I'll usually blog in the morning. I'll start reading up on my email, start reading up on what's happening in our companies early in the morning, following other blogs. Usually first call with my team starts at 9 a.m. right? And from 9 to 10 is just taking updates from the team, what everybody's working on. And then from 10 to about 6 p.m. I'll be on different calls. I'll be doing collaboration. If there's a live deal going on, just multiple different calls, especially now because everything's on Teams, right? So just multiple different times in a day, I'm on different Teams calls, just getting things done. So around 6:30, I start winding down for the day. I have my evening calls with the team, and usually try to work out at 7 p.m. 7 to 8 is a workout, and then 8 p.m. dinner. And by 9:30, 10, I'm in bed. I'll be reading for an hour before I sleep, and then start again at 4 a.m.
Awesome. And when I want to learn something, I invite them as a speakers at our programs. So from where you get your signals for knowledge? Like what are the certain set of people you follow, or your mentors, or you read certain set of things?
So I actually read a lot, right? So I usually have 2 or 3 books that I'm reading at the same time. I also follow a lot of blogs. Usually I follow the blogs of US VCs, right? Because they've usually had a much longer run than us, right? So I like, for example, I follow Brad Feld. I follow avc.com. I'll follow, a number of, one of my favorite venture capital investors is Mark Cuban. So I'll follow that, follow him, what is he doing. And besides that, I'm also, sort of getting into meditation. It's not really my thing yet. I think there's just too many thoughts going through my head to calmly sit down for 30 minutes, but I try. So those are the spaces that I'm looking for knowledge and upgrading.
And you worked with a lot of inspiring founders. So any one specific incident or a thing you can mention that you learned from a founder?
There's just so many times founders teach us so many different things, right? I think the never say die attitude. So many times I have seen founders where maybe we've written them off and we said, this is not going to work, right? This company is a dead duck. And then the founder just goes to work, and they're just in that mode that they have to make this thing survive, and they come back and they surprise you. I think that never say die attitude, and I can't just point one entrepreneur, because there's so many of them that have taught me this, that when you write them off, the guys that the guys and the gals, right, that really have that burning desire I talked about, man, they surprise you. So never write somebody off.
Awesome. And Anirudh, when you mentioned that when you came to India, you started a family office, started investing, and now you have a fund. So what's the long shot now that you know a lot of things? What's the long shot for you now?
So when you start a fund, it's almost a 20-year commitment, right? So for the next 20 years, you could say that I'll be in some version of setting up this fund platform called Artha Venture Fund. We're looking to have multiple fund managers. We're looking at only creating micro VC funds. So the idea is not to go beyond a $40 million, $50 million fund size. It's staying at that size, teaching multiple different individuals on how to run money, right? How to invest into startups, and hopefully be able to create an ecosystem of funds that can do different things. We have a fintech fund, an edtech fund, a health tech fund, a Series A fund, a bridge fund, and that way be able to service the ecosystem in so many different ways. And hopefully all the fund managers working together can create a wealth of knowledge from where each of them can learn, and we'll be able to create magic at a ecosystem level. And that's why the name Artha, right? Artha means meaning. So you want to be a meaningful player.
Awesome. And Anirudh, you mentor a lot of startups. You spend a lot of your time with community initiatives also. So based on your engagement with aspiring founders who would want to raise funds, what would be your guidance to them? If they represent them in a certain way, there are very high chances they'll get better responses. Or what would be your guidance in helping in startups who want to raise funds from VC?
See, I would say nothing can convince a VC more than you actually selling something, right? Like if you have customer demand, for example, if you're a company and you're like, listen, I'm growing 20% month on month, or 10% week on week, for example, and that's the kind of growth you bring into a VC, their propensity to respond to you goes up so many more times, right? Versus saying this is an idea, I'm going to figure this thing out. Can you invest in me? So I would encourage anyone who's looking to raise money, especially early stage, right? First 1 or 2 rounds, go there with the validation that you've built something and there is something growing and there's something amazing happening, and therefore the VC should look at you and invest in you. Second thing I would tell you is always try to reach a VC through a referral, right? Find a way, look at their portfolio, find some founder in their portfolio, some way you can convince them to take a look at your business plan and send that to the VC. Because I can tell not just me, I think any VC across the world will tell you that when a founder sends them a referral, that has a different connotation for them. They'll probably place it, as we call them gold, right? Gold startups, the gold leads, because those founders have obviously looked at the company, met the founder, they understand that whether this is actually a cultural fit, and they'll be able to only refer companies to us where they feel that we would be a fit, and that's why we place a lot of value on them. So find 2 things if you would look at.
Awesome. Satish, Rishabh and Shefali, I've enabled you to speak up. Ask a question so we can finish it early. Satish, can you speak up?
Yeah, this is Satish here from Kratos Innovation Labs. During this pandemic, Anirudh, what we have noted is one of the sectors that has been immune is agtech, agriculture. With the recent policy changes with one nation, one market, which was just cleared 3 weeks before, we see that there's a good opportunity for creating marketplaces where we connect farmers that they can sell not only in this jurisdiction of, say, Tamil Nadu or AP or South. Now they'll be in a position to sell in West Bengal or further places, right? So we built a platform which is totally blockchain, IoT, and deep fusion tech.
So, Satish, I would request you to get to the question. So we are towards the end of the session.
Okay, the question to you is that, Anirudh, is it in your portfolio that would you be interested to invest in an agtech platform? That's my question.
No, we have done some agri-tech. I personally have invested in Farmers FC, which is a Kochi-based startup, and very interesting, farm to fork kind of model. So yeah, if there is something interesting you're doing, please reach out to us.
Yes, and the question is, if startups want to reach out to you, what is the best way to reach out to you?
Best way is just email us. I have a team that specifically looks after new investments. prospects@artha.vc is the way, but I can tell you again, the best way to reach out to us is go look at a founder that we have invested in and convince them to send us an email. I think that will get you the fastest response from us.
Awesome. Rishabh and Shefali, can you speak up?
Hello.
Yeah. Yes,
Yeah. First of all, Anirudh, thank you so much for doing this. And my question to you is, So sometimes we get the first rule, let go out in the market, don't rely too much on the investors, get your first customers, get revenue. But sometimes, like the product which I have built, so my business model, the structure of it is B2B2C. So the B in the middle is an enabler. And for that, we need some sort of tie-up with the airports authority or the airline companies, and see the customer is the airline traveler. So we can get in the market and earn revenues, but then the product innovation would suffer a little. It won't be the same product. For that, we need a tie-up. And for that, we need money. So what do you think, what should be our approach in this case? We should go with some sort of beta version in the market and earn some money, or we should directly approach for the validation? How should we go?
I think you answered the question, right? I think the best way to do it is come up with an MVP, get to market, sort of co-develop. I mean, I was part of a company that got acquired by Rapido, where we had to build something very similar. And what we did was we brought in a marquee anchor client, and we said, listen, we'll do it. We'll solve whatever problem you have, and we'll do it at a cost plus model, right? But the product remains mine. and we went by solving their problem, we created a product. In essence, the customer paid for the product development in a way, right? And we were able to we were able to create some IP that eventually got acquired, right? We couldn't scale it for whatever reasons, but it was a good IP, it was good data analytics that got acquired by a larger company. So I would say that instead of waiting and trying to create the perfect product, and then there's nothing known as a perfect product. Build a beta, build an MVP, do the lean startup methodology, build, measure, learn, and go to market, right? And once you have some traction, I'm sure there'll be investors who line up to invest.
Okay, Shefali, can you speak up?
Yeah, hi. My name is Amardeep. So hi, Anirudh.
I think Shefali is the question.
Achha, Amardeep is speaking from Shefali.
Yep. Yeah. I mean, it's the same Zoom problem for every one of us. So my question is regarding the renewable energy sector. I guess Artha also has one of the
verticals there. Yeah,
verticals
invest
in renewables, right? So what do you think is the prospect? Do you think there is intense competition when a lot of big players are entering the market and the smaller ones are exiting out? There's a lot of consolidation happening, and looking at the tariffs and all the all the challenges that we have in the renewables, do you think there is potential for this to grow?
Yes, definitely. I think India, there's definitely potential. Let me put it that way. We continue to have interest in renewables. Almost 30 to 40% of Artha's employee base is in the renewable energy sector. Yes, it has been difficult. I think this over aggressive pricing that's definitely killed the sector. But I think there's still, because if you look at the fixed income side globally, the fixed income yields are in the 0%, right? And probably in the less than 1% kind of range. And renewables is the only thing that can consistently almost act like a bond when you're looking at a 15-year kind of a PPA, can replicate the same revenue stream like that of a fixed income product. And so if you can even, deliver a product or deliver a kind of a service to investors where you can consistently even give them 12% annualized over 15 years, people will be lining outside on the street to buy your product, right? Now, it may be difficult to raise money in this space, but Fourth Partner Energy from Hyderabad has raised a bunch of money in this space. So there are umpteen number of examples that it's possible. It is more difficult just because of the way the whole sector has been. But hey, that's why we're entrepreneurs. We always find a solution.
Awesome. Vivek had a follow-up question on the earlier one about I'm outsourcing my app to the app development company. They are saying he will own the company. Would it be okay for the investors, or what would you advise the startups who are trying
find it? If the app is so critical to your business, why should it be outsourced? Right? It needs to be insourced, right? It's okay to maybe hire some developers initially that will help develop the app, and then you don't need them, right? Once the app has been developed, but bring in a CTO. Right, you can't outsource the CTO position. I think it's very dangerous, especially when you're looking at scaling the app in the future.
Okay, awesome. Last question, Kavir. We are giving you the chance. Better mic should work. Kavir, yes, speak. Can you speak up? But specific question. Yep.
Can you hear me now?
I think we're having the same issue with.
Same. Probably we will be able to take that later on. So Anirudh, thank you so much for doing this. I have shared Anirudh's website. He does a lot of interesting stuff. A lot of good resources are available on showmedamani.com, and he interacts with founders on Thursday. So what is Damani Talks? Anirudh, if you can just briefly share about that. A lot of founders.
So honestly, I ever since I became an entrepreneur, I have been trying to bring out the story. Everybody understands what an entrepreneur does or what a company does, but very few people really know why somebody became an entrepreneur. So what we do through Damani Talks, it's from 9 p.m. to 10 p.m. every Thursday night on my Instagram channel. I bring in one founder from my network or even a funder from my network, and for 1 hour we have a chat about why they became an entrepreneur and what their real story is and what they're trying to achieve, but from a why perspective, right? Instead of a what perspective. And we've had 8 episodes so far. The next week we're going to have an amazing episode with somebody, I think, an amazing story, somebody we just recently funded, and tune in. And you can, and by the way, you can also ask questions while we're going live, so you'll have a good chance to even engage with some of these entrepreneurs. And we've had fun. Yeah, last 8 episodes. It's now a podcast as well, so you can go to Apple Podcasts or Spotify. Just type in Damani Talks. I think almost 200 plays have happened in the last 7 days, and this is sort of a growing movement. So that's what Damani Talks is all about, and
Awesome.
it obviously falls on the back of Show Me the Money. So everything is about the money. So show me the money, and then the money talks.
It's a good wordplay on your last name.
Absolutely.
So last couple of things. So friends, so we host this interesting program. So we are starting this eChai with Pioneers series, where we'll be joined by NK Chaudhary from Jaipur Rugs, and then Madha from Branch Metrics will be joining in next week. So it's a lot of interesting things coming up. So do join in, do check out our website. You'll get a lot of good information. I've shared my and Anirudh's LinkedIn ID, Twitter handle, so you can just reach out and connect with each other. So Anirudh, ending Zoom calls is a very tricky thing, and we want to end on a high. So basically, this is what we try to do it at all our sessions. So assume that this was a university class, and now there is a convocation, and you are invited as a speaker for this convocation for this particular class. So you all one-line message, and the moment you end your sentence, I'll end this call. So we'll end on a high.
Oh wow, that's you put me in the spot. But let me put it this way: that do or do not, but there is never a try.
Awesome. Thank you so much, Anirudh. And let's stay connected on LinkedIn, Twitter, or wherever we can engage with each other. Thank you so much.